Welcome to the Be What You Want podcast. My name's Chris Hall, your host. Today we've got Michael Rothner, one of the principals at the AsheMorgan Intuitive Capital Group. AsheMorgan Intuitive Capital specialise in syndication, joint ventures and complex real estate transactions across Australia. It's a pleasure to have Michael on the podcast today. So welcome, sir, and looking forward to a conversation.
Thank you, Chris. It's a pleasure to be here.
Absolutely. Now, Michael, the firm was established in the early 80s and you joined in 1990.
I did.
So 28 years.
It was. Yeah. It's a long time. Yeah. So the firm was established by my partner, Michael Moss, who was running a small finance broking business at the time. And I started my career at Ord Minnett, which was and I think still is quite a well-known stockbroking house. And I was lucky enough to be picked as a graduate trainee. They picked 4 graduates out of thousands of applicants. So I was very lucky to be selected. And I spent my first year in stockbroking. And then through a mutual friend of Michael Moss and myself, I got introduced to him, which was in sort of 1990. And we hit it off and we started working together in 91.
Wow, so that's 28 years later now. Can you tell us over those 28 years, throughout that journey, what do you love most about working in property, finance and investment?
I would have to say the people. I think mixing with all sorts of different people and seeing all sorts of different personality traits and also learning about different sort of asset classes and obviously on the finance side as well. Right,
so you seem a relationship focus in terms of the people, right?
Yes.
Yeah, it's interesting because I've interviewed some people that work in, say, stockbroking, and it is about the people. But for them, it's also about the adrenaline of the deal, of the transaction, of the moment, of that kind of excitement in the environment. I'm sure it is also a very exciting environment getting a major deal over the line.
Sure.
Both from a adrenal point of view, but also the relationship and what that brings for the possibility of the clients.
Look, I think it's a combination, like you say, of a lot of things. Yeah. But I also think that for me personally, I get a lot of pleasure out of dealing with different people, and I think it's great to obviously have success out of the deal, but it's also very sort of, I suppose, encouraging and nice to be able to provide a good service to people that are getting value out of what you're doing for them.
Yeah, absolutely. Now, the business must have taken many evolutions over these decades. When the GFC hit, how did that impact the direction of the business?
So I should take you back a bit, just a little bit about the sort of initial business. So when I joined Michael, which was in 1990, or end of 1990, as I said, it was a small finance broking business and it was offering alternate finance for people looking for non-residential lending. So it wasn't for sort of home loans. And basically what we were doing is we were tapping into different sorts of pockets of capital at that time. In the early days, many lawyers used to have trust funds and they used to lend client money. So it was an alternative to going to the banks because at that time banks, as they are today, I suppose, was quite difficult to get money from. And we provided an alternate source of funding for that. And then I suppose in the early 90s, what happened was when superannuation became compulsory, that a lot of money sort of channeled into a lot of the into a lot of the sort of life offices, etc., super funds, etc. And what happened was mortgage trusts started to be created, and we started to basically channel our business into these mortgage trusts, and effectively we became the Aussie home loans of the commercial market. And we used to be I'll talk to you about what happened up until the global financial crisis, but we were sort of originating up to $4 billion in loans a year by sort of 2006, 2007.
Australia is quite a unique place really in the world because for the viewers and listeners around the world that aren't here, superannuation is basically the pension fund in Australia, and it's nearly 10% of every single payroll. And so that's a whole ton of cash that you can, that has to, well, actually legally has to be invested in a certain strategy. So property is very common as one of the portfolio picks.
So what was happening in the sort of 90s and 2000s up until the global financial crisis is a lot of local institutions built pretty phenomenal mortgage trusts. And you had people like AXA and Challenger and Colonial First State. A lot of these groups have obviously, now there are no mortgage trusts, to be honest with you. I mean, they all sort of closed down after they all sort of shut shop when the government brought in the bank guarantee after Lehman's went broke because everybody was worried about, obviously, their capital. So we'll talk about that afterwards as well, if you like.
Well, I mean, so there was a huge $4 billion of financing that was in the financing arena. So as the GFC hit, many businesses and banks around the world, it was all about the shrinking of credit. So
exactly
with that, what was then the strategic impact within the business?
So up until that time, obviously, we originated a lot of deals to a lot of these institutions and offshore banks, which were quite active in terms of coming into Australia. And then when the global financial crisis came, really all the local funding outside of the four major banks and the offshore funding dried up. And you had a big consolidation in the industry as well. So you had like St. George being taken over by Westpac, you had Bankwest being taken over by CBA. And literally the bank, so the government came in and rescued groups like Macquarie Bank, which had they not brought in the bank guarantee, would have also suffered and potentially gone under. So we effectively after that changed our whole model because the model of our business became broken because our point of difference, albeit we were doing a lot of business with the major banks, a lot of our business was done being the non-bank sector, and we had our own lines of facility from all different parties. And when that dried up, we had to really rethink about what our business model was going to be going forward. Because we felt that being in the space that we were in was not really viable. And I think one of the lessons I've learned through my experiences in business is that you've actually got to keep reinventing yourself no matter what you're doing. So I think really that for us was a big stage of really reinventing the whole platform of the business. Absolutely. It's strategic response and not reaction, because reactivity can lead to, a short-term, the wrong outcome in the long term. But it's interesting because I moved from the UK to Australia in 2009. I got the hell out of Dodge in terms of the GFC. I thought it's time to go, all go into to hell. And I remember that Australia, from a common man on the street point of view, there was one quarter of negative GDP. It's interesting. So it's interesting to, you can be a person amongst the regular economy, but then also from a business point of view, I'm sure the, shall we say, the factorial amplification of the impact is just very, very relevant. It's not the same as being just an everyday person on the street. You've got to, at these games of 4 billion, you've got to really have your finger on the pulse, haven't you, about absolutely how you're going to, because a quarter of a percent, a fraction of a percent in your business's revenue can change everything. Sure, absolutely. And I think interestingly enough, you talk about, it was only one quarter, and I think that was also given by what the stimulus of the government did in terms of doing things on the retail side, etc. So I think in a way our government reacted differently to some of the other countries, which enabled us not to go through a recession. Well, that's probably it. And that's what most people wouldn't even know about because it happens behind closed doors. Now, with that strategic shift, was there a move away from finance into a new adaptive, responsive business model? So, I mean, the business we had pre-GFC, we call it, or pre-2008, we had offices around Australia. As I said, we were generating sort of $4 billion in origination and direct lending. We had the largest mezzanine debt book. We were doing a lot of joint ventures in the equity space. And really what we had to do was completely change all of that. We had 120 people at the time, so we went to a stage where we rationalised staff. We had to restructure our facilities. And it was a difficult time in sort of 2009, 2010. And at that time, we sort of changed really what the business was doing and moved into really principal acquisition. And it was, I would call it a sort of private equity real estate model. Exactly. Now, when a business takes such a change, I liken it to steering a ship. You got to pull that sail down and put that one up and steer it in the right direction. Get the right commands out to people and adapt. So it's there really is the commercial focus, the strategy at the leadership level, and of course people. So can you give us some insight into how you manage to manage all of those moving parts at the same time? You're re-steering the ship and keeping it afloat at the same time. Well, I think the most important thing I have to say in being able to do that is I had very good partners. And I think when you've got partners at a senior level that are like-minded and that you have, I suppose, alignment and support and you feel that you can rely on, that goes a long way. It does. So what happened was, I think at that time, obviously there was a lot of issues and problems and challenges in the business. But I suppose the senior guys, which are really the principals today, all got together, worked out what really they had to do for the business. Because up until that time, I was the CEO of the business. And then we sort of changed the model and went to sort of principals, which are really the existing 4 partners or shareholders in the business now, together with our CFO. And really we just rolled our sleeves up, did what we had to do, sort out the legacy issues that we had. So it was really 2 parts. One, sort out the legacy stuff. The second part was, what are we creating in terms of the new platform of business? So we sort of broke up in a way those responsibilities, which enabled us to sort of, I suppose, clean up the problems, but also provide the solutions going forward.
Yeah, exactly. Love it. In terms of the business now and the way it's evolved, and we're in 2018 now, so 10 years later on, what does culture and brand mean to you from a leadership point of view?
Look, I think, and it's on the back of our card, I mean, which you can have a look at, which are the principles that we like to follow our business by, which is experience, tenacity, intuition, which is why we labelled intuition in bold.
Yes.
Discipline, respect, and integrity.
Yes.
So I suppose that sort of defines a bit of the brand.
Yes.
And also, to a certain extent, I suppose, really defines the culture.
Yes.
But I think culture to me is about creating an environment where people get on, they like to come to work.
Yep.
Look, obviously there's always challenges in business and people have differences of opinion, but I think to the extent that you're able to have a robust discussion and not harbour sort of issues or resentment, then I think just like with any relationship, it just flourishes.
Exactly. I think that culture is something that it is not external to us. It is something that we must live and breathe. So, the cynical perspective is like, oh, I'm a cog in the wheel, right? If you work for a large company, for example, but actually, that's not taking responsibility for what you can do to create culture within the daily living of a business. So, I think there's a link, isn't there, to culture and brand too, because that culture starts to permeate even the experience of, say, a client walking through the door now to shake your hand, have a meeting. They can tell what it's like to work here and be in the environment. So it's great to be really conscious of that, isn't it? It's very powerful.
Completely. And I mean, if you think of the big brands today, which is sort of the world leaders like with Apple or Google or Amazon, I mean, the brand is almost integral with the culture.
Yes, it is.
So it's a bit, I mean, there's a real crossover there.
Yes. I was having a chat with a gentleman the other day, and he said he believes that the brand, it comes from the inside out. That's another way of looking at it. I think it's well put. Very good. In terms of your personal business career in your leadership role here, what's been your most challenging moment and how did you overcome that?
That would have definitely been during in 2007, 2008, when we had a substantial business with 120 people, offices around Australia, and we had to really change the whole direction of our business, which meant we had to let a lot of people go. We had to close down different offices and divisions. And it was a matter of dealing with both employees and funders, etc. And that was quite a challenging time to get through that. And as I say, sort of being able to sort of reinvent ourselves.
Absolutely. May I ask, what's the headcount now?
Well, it's funny because at the moment now, at head office level, we've probably got about 20 people, but we resource at the asset level. So I haven't really spoken about the new business, but basically what we're doing is buying. Now what we do is basically buy assets that we can reposition. We focus mainly in the commercial and retail space, and we tap into funds from both high net worths and institutions, both onshore and offshore. And effectively, it's about repositioning assets. In both that commercial and retail space.
So an example might be a shopping centre.
Exactly. So one of our biggest assets that we've been repositioning for quite a while used to be called Harbour Town. It's now called the District, which is in Docklands in Melbourne, right next to the Wheel.
I know it.
So we bought that about 4 years ago, and we've been working on that. And it's a massive reposition of a discount factory outlet.
It's fascinating. If my memory serves me correctly, 127 mil, something like that.
It was a bit more than that. Actually, it was about 150 odd mil.
Sure. It's fascinating to play in that arena. But wow. I mean, when you can influence that physical space, it must be so many. What kinds of repositionings do you do? What kind of opportunities do you spot? How do you spot an opportunity like that?
In that particular instance, it was really a sort of a tired sort of discount factory outlet. Didn't really work. It was overbuilt for its time. It was the last asset that ING had in their portfolio globally, which they were trying to sell. And basically we just saw an opportunity given the site. I mean, it was a large piece of land, a couple of Ks outside from Melbourne. So position-wise, we thought it was great. There's a massive amount of infrastructure happening in that area. But where we've taken it to today is now we're bringing it to being very destinational. So we're putting in entertainment and fresh food and restaurants, cinema complex, all that sort of stuff. So
that's interesting because there's a blend there, isn't there? I used to work in tourism, one of my first businesses, and and it was all about talking about the destination, not the individual components.
Yeah.
So it's not that you've got a pharmacy and a this and a restaurant. It's about the destinational experience.
Well, if you look at retail and what I said before about you, that you've always got to reinvent yourself.
Yes.
If you think about retail 10 years ago, 20 years ago, 50 years ago,
yeah,
it's a completely different landscape and dynamic to what it is today.
Mm-hmm.
So I think, every business is, has to reinvent itself at some, at all times.
Mm-hmm.
And retail today is, we see it as making sure that you bring people and it's an experience. It's not just about going shopping to buy goods, because at the moment you don't really need to go to a shopping centre to go and buy your groceries or your clothes. I mean, you can all be delivered online, and if you know your sizes and all that sort of stuff, it's a much easier process than living your own.
It's true, isn't it? And we're kind of now the Amazon generation, aren't we? And Amazon just launched in Australia as well, so it's very relevant. Yeah. Okay. No, interesting. From a personal routine perspective, are there any personal routines that are absolute musts for you that you do on a weekly, daily basis that just, hey, I do this so that I can turn up as the best version of myself?
Look, I think you go through different stages like anything in life where when you want to work at your maximum capacity, routine I think is fantastic. I try to go to the gym most mornings.
Yep.
On weekends, I like to play tennis. Personally, I play the piano.
Nice.
I'm trying to spend time with my children.
Nice.
So, yeah.
Great. And what genre you play? Classical, jazz,
jazz.
Bit of jazz.
Yeah,
Good man. Yeah, nice. I was taught as a jazz guitarist when I was learning guitar originally. I was told that I couldn't play jazz guitar in my musical exam because it wouldn't get me the grade.
Yeah.
So I had to pivot at 17 to learn grade 8 classical guitar.
So I didn't really pick it up until about 10, 12 years ago. I never played any instrument.
Yeah.
And now I really enjoy it.
Yeah, very nice.
Yeah,
very nice. Are you in a band?
No band.
Okay.
No band.
Yeah.
Just play privately.
There's a nice little personal story. My wife and I met at an open mic night in Bondi.
Right.
Yeah. You may know the bar. There's a place called 34 Degrees South.
What's that?
It's on South Bondi side, on Bondi Road. Yeah.
I think I know it. Isn't there there's a service departments upstairs from there or something? Isn't it?
Correct. And then downstairs in the dungeon is where all the musicians go on a Wednesday night or whatever it is.
Yeah, exactly. Yeah. Is it Wednesday night?
Something like that. Yeah. So you never know. Hey, if you want to get out the keys in public, get your core keyboard down there or something.
Well, if you tell me you're going, we should make it an evening.
Oh well, there we go. Done. In terms of your personal values and the link to your career, what's the connection point? Like, what out of your personal value set, which ones do you see having brought success in your personal career, and what are they?
That's a great question. I think being able to connect with people and relate to people, and I think also to a certain extent being able to not hold grudges and be resentful, because I think everybody pisses people off at one particular time.
Yep.
In their career or people that you deal with. And I just think it's about looking forward, not looking back.
Absolutely. I think I love that thing in sales where they always say there's always going to be three people: someone that wants to buy now, someone that might be persuaded, and someone that's never going to be interested.
Yeah.
The kind of the same thing goes with pissing people off. There's always going to be a thing where you can disagree, and it's all the maturity is just being able to move on and let go and realize this. Yeah. We're all here to do something together. I call it outcome-based relationships, where, say, for example, if I was, having a heated discussion with someone, it doesn't matter what the heated discussion is in the moment. If you focus on the outcome is that I've got either a personal, professional relationship with you, I'm committed to making it, getting to the outcome of making this either workable or to agree to disagree or whatever it is. But by focusing on the outcome, it can detach one from the lockjaw of, an argument. I don't even like using that word, heated debate.
Agree completely. Is that a common theme in some of your interviews with successful people?
Oh my gosh. I mean, I think that you've got to be willing to stand for what's important to yourself and the business always. That's what strength is. Yeah, without a doubt. So it probably is a common thread, actually. Yeah, without a doubt. But also I know that many senior leaders are just very good at relationship building.
Yeah.
Because you are the mouthpiece of the business in one way or another.
Yeah.
For anyone that's considering going into the finance industry, what kind of advice would you have? If you had a young gun again, like, yourself, you're 21, you've just graduated, you're thinking about going into finance, what would you tell them?
I would probably say make sure you keep your ears open and make sure you try and get into I suppose, an industry or a firm where you can learn a lot in your early years. Because I think people, I mean, at the moment now, this generation is much more about me, and it's much more about getting things very quickly.
Okay.
And it's all about sort of, because of technology, etc. Things are very instant in terms of people's expectations of what they're going to get. So I think people should be less motivated by sort of money and immediate success.
Yes.
And more sort of interested in knowledge.
Yes.
And learning.
Yes.
Which will ultimately provide a much better base.
That is fascinating, isn't it? Because the YouTube generation, online libraries, all of that stuff. I'm a big YouTuber myself. I love taking in new knowledge and learning. It's an interesting cultural pickup there, though, isn't it? Because the information, you can do anything you want now. You can learn any new course, a language, a thing in business, mostly for free. But the knowledge is so powerful. Sometimes you very much have to complement that with experience and mentorship and good experiences. Just because, and this is I think what we're tapping into here, just because one has read a blog, watched a video, or done, say, a week with you, doing whatever work experience, there's the final piece of the puzzle in business, which is time. Time, effort, results, reputation, brand. Because actually you can have a brand of a business, but the personal brand of oneself is everything from, it can be measured, it's your reputation, size and quality of your network, all that good stuff. And that takes investment, doesn't it? It takes whatever it is, delivering on a project, you've got to see it through for a year, for 2 years, whatever it is, build yourself up. But
I think also finding a mentor from a young age in life is very valuable, because it actually, and I'm not suggesting it doesn't necessarily be to be one mentor. You can have different mentors for different sorts of aspects of what different aspects of your life. But I think if you have somebody that can help you sort of channel through difficult periods, it can often fast track outcomes. And I think that if there's someone that you can lean on that has that experience, enables you to A, deal with things better, and B, get through things much quicker.
Absolutely. Have you had any particular pivotal mentors in your life?
Probably my business partner, Michael Moss. I would say that he would be probably the most influential mentor I've had.
Fantastic. I'm sure you've grown together and also learned so much from working with him.
We would be together nearly 30 years in 12 months.
Wow.
Yes, it's a long time to be in business with someone.
That's fantastic. Yeah. That's like a brother.
It is.
It really is.
And my other partner, Elton, who's a bit younger than us, has been with us 25 years.
Yep.
And the fourth partner is actually my partner's son, who's been with us 15 years. So we've been in business a long time together.
Wow. Yeah. Now, outside of the organisation, what do you do to stretch yourself from a growth point of view?
That's a good question. Well, I like to travel. I have been involved in YPO. I don't know whether you know what YPO is, which is a great organisation that, if you're able to get into it, offers wonderful opportunities for all facets of life, whether it's going to seminars or doing things personally, personal growth stuff, etc. Has been great.
Yes.
As I say, I play the piano, I play tennis, I spend time with friends and family.
Absolutely, yeah. The Young Presidents Organisation is wonderful, isn't it? Because the educational part, the conference part, and also I'd imagine peer group, because it must be quite refreshing hanging out, shall we say, with someone in a completely different industry.
Yeah.
But they give you insight as to what they're doing as the next thing, and you go, oh, wait a minute. Either I get confidence that that's not applicable to our business, or that might be interesting to pursue.
It's phenomenal how they sort of manage that organisation in terms of, as you say, putting different people from different industries together, and they do it on really a global basis. So whenever you're travelling or you need to be somewhere, the capacity to be able to connect with people in different cities, in top professions, I think is phenomenal.
Absolutely.
Yeah.
From a professional point of view, what's on the horizon for the next 12 months for you?
Look, I just think looking for more opportunities where we can add value to in the real estate space, obviously. So, as I said earlier, we basically look for assets that we would call opportunistic, that we can reposition and make money for ourselves and our investors. So we co-invest in everything we do. And our model is basically, we charge obviously an asset management fee whilst we're running the asset, and we charge a performance fee once investors get a certain threshold return.
Yes.
So it'll be looking for more opportunities. I think that, you hear different I suppose, arguments in terms of where the market's going and what's happening with interest rates, etc.
Mm-hmm.
But I think, we'll continue to be very selective in terms of what we do. We don't buy a lot of assets, but when we buy an asset, we obviously focus pretty hard on it and make sure we get a positive outcome.
Yeah, absolutely. And one of the beautiful things about working in finance is that, especially if you look at the journey of where the business has gone from 120 direct employees to 20, but all the contractors according to the site.
At the asset,
at the asset level, right?
Yes.
It means that regardless of what happens in the market, you've got the flexibility to, expand and contract, at the asset level.
Right. That's exactly right.
And then your relative overhead for your core team will be 20 people is less than 120. So, it'll be manageable. You can adapt.
I think the model we have today
is
a far superior model to the old model.
Yes.
And the old model under that finance business was a much larger infrastructure and overhead, and you had to do massive volumes at a much smaller margin. This is not about that now. This is more about finding the right opportunities. And if you're sort of giving your smarts to that, it can be far more lucrative.
Yeah, absolutely. And it's also blended, right? So you've got the transaction fee of a transaction, the management fee ongoing, and all of that is exactly based on relationship, like real relationship. Let's give you fantastic value to our clients.
Sure.
And you then further blend that with some direct investments so that it can be capital gains and all sorts of things.
So when we started, we actually were only tapping into local funding here from sort of high net worths, etc.
Yes.
And over the last 4 years, we've been traveling quite a lot up to sort of Hong Kong and Singapore.
Have you?
And so I probably do that together with one of my partners. We probably go 3-4 times a year.
Yes.
And we've now tapped into a lot of capital in that region.
Right.
And that has been really phenomenal for our business in terms of, being able to get larger assets.
Yes, absolutely. Yeah. So the assets, are they exclusively in Australia, but the funds might come from the globe?
That's exactly right. Yeah.
Got it.
Spot on.
Really interesting. Yeah.
So all of generally we focus in Sydney, Melbourne and Brisbane on the eastern seaboard.
Yeah.
As I say, they're generally in sort of major metropolitan areas. We generally don't go outside pretty far from sort of Sydney, Melbourne and Brisbane.
Yep, makes sense. Well, I wish yourself and the business all the best with the times ahead. It sounds like it's a really exciting time to be in the property market and investing.
Yeah.
Very dynamic team that you've got and very committed and, wonderful relationship focus. So, Michael Rothner from AsheMorgan Intuitive Capital. It's been a pleasure having you on the podcast today and I really want to thank you for your time.
Thank you so much for your time. It's been a pleasure meeting you.
Absolute pleasure.
Thanks again.
All the best.
Bye-bye. Bye-bye.